This is Power Trading Radio Live. Power Trading Radio Live, fueled by Online Trading Academy. For more information on the show, visit us online at powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. Merlin Rothfeld to you for your Monday afternoon edition. Hope you had a great trading session out there. Pretty similar to what we've seen over the past couple of weeks, which is a weak market to start off, and all of a sudden things come ripping back and looking great near the end of the day. Well, let me rephrase that. Not great, but at least most of them ending up in positive territory, having some positive returns at the end of the day. Tomorrow's a big day because we have a webinar where we'll be doing in conjunction with Myers-Briggs. Of course, you guys know about MBTI, which is a personality test, which I've taken a couple of those over the past couple of weeks. It's been very interesting, a little bit different than what I expected, and maybe some indication to me, at least, as to what some of my strengths and weaknesses are. What we're going to do with Myers-Briggs tomorrow is do a webinar for free for everybody who would like to join us. That will be, you can sign up for that one at otacademy.com. Simply go to the front page, as TJ's got it up on the screen there. You'll see a little box that says Psychology of Investing with Myers-Briggs. Well, you click on that one. It'll give you a little bit more detail about what we're going to talk about, but primarily we're going to focus on how the power of the mind can impact your trading, what areas may be of strength or weakness, and what we can do to hopefully fine-tune our game within our head to hopefully make us better investors, whether long-term or short-term. And to be honest, a lot of these personality traits impact us in many other areas of our lives, so it probably is of interest to just about everybody out there. Feel free to share that link. Tell your friends. We'll be fully interactive, and hopefully we'll see you guys then. That will be at 10 a.m. tomorrow, the 19th of November. You can register at otacademy.com. All right, TJ, start me off with the bad stuff. We'll start with a negative note here, which is going to be the Bitcoin side of things. It was rather ugly today. You were down, not over. You were almost down 4%. 3.9 to be precise. There's your chart. 82.14 is where it ended today. That's down $334 per Bitcoin, a slide of 3.91%. And really a lot of that happening this afternoon, right around 10:30 in the morning. An ugly slide. We're bouncing up a little bit, but you know, that's the way this cookie crumbles here with cryptocurrencies. All of a sudden we get very sharp, powerful moves that, the equity market wishes we had moves like that. That's your worst performer, starting number 7. We go back to probably the more tradable instruments, which some of you may have been involved with today. Crude oil was your next victim, down 1.46%. And the tricky part about this is you guys can see that yellow box that TJ has on the screen over there. Yep, zoom in a little bit. All right, perfect. You notice what happened is we closed right at the upper range of that box on the previous session. Today we actually gapped up, and it looked like, okay, here we go. We could go and challenge that 59 level. Well, all of a sudden it just was a completely southbound train for a majority of the session. As you can see here, not a lot of upside potential there. So one of those little bear traps as it pulled the bulls in and then just ripped them to the south side, which I think we'll be seeing a lot more of that here in the near future. Anyway, we are back in that little yellow box from a closing perspective on the day. You had crude oil down 1.46%, down to $56.88, an 84-cent slide. All right, number 5 brings us back to the Treasury yield, so we'll bring up your ZN futures contract here. As you can see on the chart, we had just a little tiny candle, nothing really that major. It was a green one, though. We were down 1.42% on the yields, which brought us to 1.8080. And yes, there was a question earlier about this being a flag formation. You guys heard me talk the other day about flags. It could definitely be considered a flag formation. For those that don't know, this has all of a sudden, for some reason, become a very popular question about, is this a flag? Is that a flag? This actually would be considered what is called a high and tight flag. We'll remove some of the price axis stuff over here just so we get that lined up. And then, TJ, if you wouldn't mind, draw a box, just like you did the rectangle before, because it's really a high, tight flag, which would look something like that. So there you go. Really all this tells us is that based off of price action, certainly over the past week, that it looks like it's starting to build some strength. If we get above that little line in the blue box, okay, now we might challenge another supply zone to the upside. But right now, that's all we can say on it. It still looks weak, right? Because you have these highs from September, October, November. They're getting lower and lower. So it would not be surprising to see this also put in a shorter term high right around here. But we can make the arguments for either direction. Bottom line is map out your trade and go with it. So that's what we had for the 10-year, down 1.42% on the yield to 1.80. All right, we're still a ways away from the podium. The Russell was staring at it ever so close, down 0.26%. Oh, I guess we still have that flag drawn in as well. You're down 0.26%, a 4-point slide in the Russell to 1,592 on the day. And again, nothing that spectacular with the Russell. Podium time it is for the S&P 500. Here is your ES. It was up. One of the couple indexes that was up. All-time highs on the S&P 500, all-time closing high, all-time intraday high, yada, yada, yada. The song remains the same, as Led Zeppelin would say to us. We do have a spinning top formation, which means, zoom in, TJ, I know this chart's getting a little condensed. What we mean by that is, you notice the way we had the previous session, a nice big up move, right? We kind of ripped out through this ceiling that had been establishing for the better part of a week and then ripped through it. Today, we have a little bit of a hesitation pattern. Not to say that the trend's going to have a pullback. I think we would all agree that at this point, it's probably due for a little bit of a pullback. I'm not talking a huge one, but at least, getting back down into maybe the 30, 37 levels or some area of pullback down, a little bit of a breather because it's been on a heater recently. Of course, we talked about that when we look at all-time highs. That is normal. When we break through to uncharted territory, there's really not much to stop it from a technical perspective. So, you kind of got to be, I'm with you, Jack. Jack says I'm pessimistically long. I am too, right? I still think that this is a house of cards waiting to crumble, but it's not crumbling. It'll just keep on going until it doesn't. So buy the pullbacks, buy this uptrend, and keep on riding it until something proves that trend is broken, and we haven't seen that. We did get that back in November, December of last year, but that has been subsequently erased, and the bulls are back pushing it higher. So S&P was up 0.05%. 3122 is where it ended up closing. That was a gain of only 1.5 points, so really not a big day, and nothing really noteworthy other than all-time high, all-time closing high, all-time intraday high. All right, even better than that, though, NASDAQ. Here is your NQ. Remember, S&P was up 0.05. NASDAQ doubled that. It was 0.11% gain. The tails on that were bigger. You notice the legs of these candles on today's chart for the NASDAQ 100 a lot bigger. It was, again, an all-time intraday high and all-time closing high, as Unscamble says, only air above. Right, and that's really the toughest thing because you have all these people trying to figure out where to short this. Don't. Right? You don't have anything to prove to you that there's a shorting opportunity other than it's overpriced. Yeah, it is. But it can lead to much more overpriced. So trend is your friend. Keep rolling with it. NASDAQ Composite was up 0.11% today. 85.49 is where it closed at, a gain of 9 points. But it was not your best performer. Doubling the gains of the NASDAQ today, we had gold. So here is your GC chart. Taking the gold spot. So gold is the gold today. You look at the technical chart here, really not that great, but the candle, hey, it started to show some green. We're up 0.23% on gold for the day. 1471 is where the GC closed at today. That was a gain of $3.40 per ounce. So all in all, even though you just had a 0.23% gain for gold, it was your best performer out there for our top 7 markets, and hopefully that puts some green into your pockets on the session. All right, I'm not sure about our guest today. We were supposed to have Chris Manson on the program. I walked by earlier. He was teaching, so we'll see if he's going to be on the program. Send in questions if you do have them for Chris Manson, and if he's here, great. If not, I will answer those questions. I want to go to this question from Boss Poopa, who sent this one a couple days, actually, I think a week or so ago. I just haven't been able to get to it. He says, why is there such a difference in the futures price of West Texas Intermediate crude and Brent? Big differences between those, right? Brent is obviously not from the U.S., and that doesn't really mean that that's determinant for its price, but it comes from the North Sea, whereas WTI is coming from U.S. markets, mainly Texas, Oklahoma, and areas like that. So there's a difference in the quality of those oils. Brent is technically what they refer to as a sweeter oil. What that means is its sulfur content is slightly lower, so that the sweetness of oil is determined by its sulfur content. So what they look at with Brent and WTI, those are both considered sweet, meaning it's less than it's 0.5%, so 1/2% sulfur. You look at some of these other ones, some of the Saudi Arabian oils they're pulling out are very heavy. They're over 2%, which make them a sour oil. The sweeter ones are a little bit easier to work with, less refinery process needed. Now, when you have oils, let's say they have the exact same sulfur content. So essentially they're the same basic material. Let's say it's Brent or West Texas Intermediate. And I'm making the assumption here. Let's just, because they're not the same, but I want you to kind of think of it as, let's say they were the same and they had a 0.5 sulfur content. There's obviously difference in extraction of those materials. Obviously the North Sea is coming from the ocean and you have maybe greater reserves. The West Texas Intermediate is coming from Texas, and there's obviously no ocean, so you don't have that to contend with. Also, they can load the oil in the North Sea right onto ships and ship it, whereas in Texas, they're going to have to pipeline that to the Gulf and get it out. So there's distribution costs to consider. There's also supply costs, and as we've done more and more fracking and the shale boom that's gone on in the U.S., that's caused West Texas Intermediate to be slightly less, right around, let's call it 57 and change, call it, right around, 56.97 if you want to be precise, whereas Brent's going to be slightly higher. Other than that, they trade on different exchanges, but that's pretty much it. It's going to be a couple different factors. It's going to be the extraction cost, it's going to be the transportation cost, it's the quality of the oil, and also the supply and demand of that oil. So those are kind of the four main things you think about with those. So Boss Pupa, hopefully that helped you out a little bit. If you'd like to know more about the grading and shipment and delivery and all that, you can go to the respective exchange. Brent is traded on the ICE exchange, whereas West Texas Intermediate, or the CL contract, which we generally reference here on the show, that is going to be trading on the Chicago Mercantile Exchange, or CME Group. It's not on that exchange, it's actually in the NYMEX, but that's part of the CME Group. So there you go. Hopefully that helps you out and you get more information. If you didn't get that information that you need there, boss, let us know what it is. Send it on in at powertradingradio.com. Click that Power Blast button or join our chats on YouTube right now. We've been broadcasting live here pretty much every day for the past few years on Power Trading Radio's YouTube channel, as well as Online Trading Academy. So join our discussion. Say hi to Gary, say hi to Unscammable, say hi to Ruben, say hi to Brendan's not there today, and Jack Daniels, I love it, the pessimistically long trader out there, as well as Dave and Gayer and Dana, hello Francis, and all the others, Tactical Options as well. Thank you guys for joining us today. Send in questions, and hopefully I'll get to all those and give you answers on today's show. Stay tuned, we'll be right back after a short break.
There are lots of different reasons why I teach. I know what it's like from the beginning because I was a student here. I love going around the classroom and you get those aha moments where, slowly those light bulbs switch on as the week unfolds. And for me, it's magical.
I've been telling students for years that I derive professional satisfaction from sharing my knowledge about trading. I grew up on the floor of the Board of Trade. My father was my first mentor.
I like to see people run. And in order for them to run, they need to walk well first. And for me to help them build a solid foundation and then watch them go forward, that's something that money can't buy.
What these people are now realizing is the freedom that they have always wanted to achieve. And it's a quite humbling and honorable experience to be able to know that in some small way I contributed to them.
The students make the academy. And I meet wonderful people from all walks of life, and they always have a story to tell. And the story is always interesting.
Being able to explain things in a way where the light bulb goes off, and that gives me the chills. It's a wonderful experience to see that growth in somebody else and that you're a part of that. It's magic.
The students, I really want to enable them to bypass the challenges that everybody goes through.
There is rather a selfish aspect, and that selfish aspect is I have found more of me as a person. Just a self-discovery.
And in every class that I teach, I get to share my knowledge, and I get to see each and every one of my students learn how to trade in a bull market and in a bear market and even in a sideways market. And each time I see that student of mine take that first trade, it's such a rewarding experience. It's awesome.
Welcome back to Power Trading Radio Live and your host, Merlin Rothfeld, with today's special guest.
Hello everybody, welcome back to Power Trading Radio. Sorry, I got to get the cough drop out of my mouth, otherwise I'm salivating the entire show. I hope you guys are doing well. I have a couple great questions coming in today, so I'm going to try to dive into those. We were going to have Chris Manson on the program, but he's still in class, so unfortunately we won't get Chris on today's show. My bad. The perils of trying to have a live guest on the show every day, especially here in studio, sometimes becomes a little challenging. So my apologies for those of you who had your heart set on Mr. Manson on the program today. I'm going to start off with two what I think are kind of basic questions. I know some of you are well past this, but oftentimes I want to help people understand what are some of the challenges, obstacles, and things they need to think about with regards to trading and investing, and that's kind of what we're going to be talking about with Myers-Briggs in our free webinar tomorrow, which you can click at otacademy.com and join that webinar. That will be at 10 a.m. Pacific time tomorrow, the 19th of November. There are two out there. Kathleen says, I've been trading for 3 months and I'm getting stopped out a lot. Any suggestions on how to fix this? It's so frustrating. Unfortunately, I can't I don't understand the context. Yes, I know you're getting stopped out, but I need to understand a lot more information here, such as how are you trading? Are you a shorter term intraday trader? Are you a longer term investor? Are you somebody who's just making 1 or 2 trades a month? That can be very helpful in me coming up with an answer. So let me just do 2 different scenarios here. I'm going to start with the big picture and saying you're a long-term investor, maybe a 401k, maybe you're buying and buy and hold, which means you're going to hold things for a couple months, weeks, maybe a year or so. Generally with that, what you want to do is obviously you want to understand how much that security, whatever market it is that you are trading, is moving. And there's certain indicators we can use to help decipher exactly what the characteristics of that beast are, how fast it moves and how often. The other part here goes back to what we've been talking about on the show, which is simply what's the trend. There have been a ton of people who are getting smoked right now, shorting this market, thinking it's going to go down. This is one of the things when we come to psychology we have to really understand. If we keep telling ourselves this market can't keep doing this, it's moved 4% this month already, oh, it can't do this, and we just short because of that, then we're the fool. Because the trend is your friend until the bend at the end. Some of the viewers are probably sick of hearing me say that, but let's be honest. Could it not be more true in this present moment? I mean, TJ, bring up the daily of the S&P. Look at this thing going all the way back. You could go all the way back into January if you want to look at the big trend, but you can also break that down. There were some points where you could have said, all right, this was the bend at the end, right? There was a big sell-off that we saw happen back in April or in May. We can see another pretty aggressive sell-off here at the end of July and early August. You had a fairly decent sell-off going on in September, and then all of a sudden October has been like hallelujah, right? It's been nothing but up. So your brain will tell you, hey, you know what, a sell-off is coming. It's just natural markets where you have a big surge up and a big pullback. That's great, but don't try to pick a top when you're at uncharted territories. We have no supply. Like right now, if these markets were at a strong supply level, I'd be telling you, hey guys, I'm loading the boat short right now. I'm going to go counter trend here. I know it's counter trend, but I'm at a strong supply level. That said, I wouldn't do that right now because I have nothing that shows me that there's any institution involvement as a sell signal. So maybe you're trying, Kathleen, maybe you're trying to short this market right now. That's error number 1 in a big way. Best thing you should be doing is looking for buying opportunities here. So that's maybe somebody from the long-term perspective. You have 2 things. You're either going against the trend or your stops are too tight. Now let's refine this down and go into a smaller time frame. Let's say you're an intraday trader, somebody like myself who likes to just be in, out, and move on. Same thing still applies, right? Number 1 is still your stop losses. Now, and maybe we kind of hurt ourselves, but one of the things we did years and years ago is there were rules in class. And we did it as a disciplinary tool when we taught live. Because you're trading with real money, it's our account in class in the what was called course, or it was called Pro Trader back then, now it's Course Strategy. And in that class, generally you're going to be trading with live real money accounts. Okay, right now we're in a transition period where it's not going to be happening right now, but we'll be back there soon. The point there was we wanted to set up discipline and rules. And one of the biggest things that people do that causes them to lose money and lose a lot of it is not using stop losses. So in the class, we'd say, all right, guys, you're going to use a 7-cent stop loss. Well, when you're looking at something like an index, like the SPY, well, now it might be a little bit much, SPY or NASDAQ when they were trading down below 100, okay, 7-cent stop loss might be appropriate. But 7-cent stop loss on Apple might be the spread, the difference between the buy and sell. So as soon as you buy it, you're going to get stopped out. So a lot of people when they finish classes would go home with that mindset, okay, I have to use 7-cent stops. No, it's the same basic characteristic. If you're using an intraday style, you need to use a measurement of how much that specific security moves. So go back to my rant over the past couple days about how I do think that there's value in the 5 and the 15-minute charts. Fine. If you're using a 15-minute chart to plan your trades and get down right to your building out your supply and demand zones, then what you're going to want to do is you'll probably want to use an indicator which will tell you how much it's moving every 15 minutes. Once you establish that, that's going to be the basis. There are some calculations we will do to adjust that, but that's the basis for your stop loss. Unfortunately, I think a lot of people are still using 7 cents or 10 cents, whatever your instructor uses for that specific class. So that's probably mistake number 1 is stop determination, right? How close those stops are, how tight those stops are. Another factor that happens is a lot of people will look at how much a security is moving, but not at the right times. For example, if you were to take a calculation of Apple's movements in a 15-minute period at 12 o'clock East Coast time, right in the middle of lunch, it's probably going to be very, very small. You look at it in the opening 5-10 minutes of the market, it's going to be huge. So knowing when the characteristic is taken or when to pull these numbers is also very, very important. So that's probably it for me. My general comment here is for most people that are starting out that want to be, let's say, a day trader, looking for somebody for daily income, it's a bit more challenging. You have to be much more disciplined than somebody who's a longer-term trader, right? A longer-term trader can sit back, sit on their hands, relax, and not have the heart palpitations or the angst or anxiety about all these little minor fluctuations. So it's probably better for people to start off on a little bit bigger picture. You know, maybe you go to trades that last a week or two, right? And then once you start to understand it and you get the feel for how this is working, and there's a lot of details there. I'm sure many of you watching the show right now have gone through that trial and error, and you realize that when you can take a step back and relax and breathe a little bit, you see a lot more. Once you get comfortable with it, then of course we can start to focus maybe on shorter term time frames if that's what you choose to do. You don't have to. But I notice that people who are generally focusing on the short term time frames, they get stopped out a lot. It could also be that we're going counter trend again. That is one of the challenges of intraday trading, but usually with an intraday basis, you are greeted with a lot of supply and demand zones over the past couple days or weeks or months on the chart. Right now, again, if we looked at the S&P 500, do we have any supply levels? We don't. So that would probably you should probably start to shift your bias even as an intraday trader to more of a long side at demand levels. All right, Kathleen, hopefully that one helped out. I know it's a tricky subject, and you know this is why we encourage everyone to do trade plans and journaling so we can start to learn from what we're doing. One of the most common mistakes is people have way too tight of a stop loss and they're getting hit all the time. There's calculations that we have in Core Strategy to help you understand exactly what that should be. Keith said, what would be your recommendation for someone who is just starting out in futures trading? I wish we could have Chris on the program to get his insights, but mine would be start with the indexes. Start with something that's going to be a little bit slower moving. And I know some of you are going, wait a minute, I've got leverage and I'm using leverage on some of these major indexes. It's still going to move fast, yes. But in general, the S&P 500 or the Dow is probably one of the slower ones because of the amount of money per point. It's a great learning tool. Probably a little bit safer and easier than things like oil, which are going to be driven by much more intense geopolitical scrutiny and reports that come out from OPEC and things like that. So those asset classes, I think, should be a little bit more advanced when you look at things like trading corn, wheat, soybeans. You're dealing with different factors, right? When you look at indexes, I think it's much easier to understand how those supply and demand levels are created because it's market driven. When you look at some of the commodities, remember you're starting to look at a lot of different players out there. And when I say commodities, I'm talking about your metals, your softs, your grains, all that type of stuff. So I would recommend starting off with the indexes. If you're very new to it, I would start off probably with Dow futures. I know it's kind of boring sometimes with the Dow, but its price per tick is a little bit better, and I think that's a nice starting point. And then work your way up. I would probably stay away from the Russell. Make that one your last one because it gets a little bit crazy on its movements out there. All right, is that are we doing for opening segment? No, I'm going to keep on going. All right, I'll keep on going. Let's see. How to catch Jason Ma on Online Trading Academy's YouTube page is how to catch GC's breakdown. How to catch it? Join that trend. All right, so. Right now, if we look at this GC chart, and this is the gold futures, you can see we've got this downward trending line across the top. Now that is by no means gospel or the absolute line in the sand, but it is an important point to keep an eye on because you notice it has been drifting down slower and lower. So you're wondering about how do we capture the breakdown? Well, you already missed the breakdown. Technically for me, this right here, what we saw happen on, we'll call it the 8th of November, that was the breakdown. Now it's doing a retest of it. We're going to have to wait and see what happens from this point. But you have a couple different supply zones, right? You have a couple areas where you'd say, you know what, there probably is going to be some hesitation. There's one right there. There's also one a little bit higher up. And then what is important is understanding what strategy we want to implement if it does get to those two levels that TJ just drew on the screen. Get rid of some of these other lines, TJ. It's getting a little bit convoluted on our screen. There you go. So TJ just drew in two supply zones. Those are not to the exact points. I know we have some Online Trading Academy graduates who are going to be like, hey, that's not exactly rightly drawn. You're right. It's not drawn the way that it should be. I could refine this down and come up with much better zones, but that's not the point. The point here is how do we join it at one of those two spots? Those are going to be higher probability entry places for us to capitalize on this continued downside move in gold. So, Jason, that's kind of how I'd be looking at it. We're trying to buy a breakdown. And put one more line on there, TJ. Go below the lows that we saw last week. Yes, yep, that line. You guys notice on the 12th of November, we bottomed out, right? And it was really on the precipice of closing this gap, which would have vaulted it straight down to 1432, right? So we could have jumped from 1446 to 1432, capturing 14 points on the GC futures contract. Would have been pretty nice. If your comment is how to catch GC's breakdown, if you're looking for a break and waiting for it to break a low, you could potentially be leaving a lot of money on the table. That's why we want to be looking and selling as this thing is rallying into an area of supply. I think that's going to make it a little bit better and safer for us, utilizing that institutional order flow or whomever it is that has pushed this prices back down in the past. That is really what core strategy is all about, is identifying what factors are causing price to move and then using our odds enhancers, a whole list. It's basically a checklist of criteria so that we can determine between these two which one might be the better one. I know looking at this as a retail investor, you're just saying, well, okay, great, I'll do both of them. Well, one of these is clearly better than the other, and I'll leave it at that. But one of them is definitely better than the other from a supply perspective. But yeah, I'll leave it there. So hopefully that helped you out, Jason, a little bit on how you join that downtrend. Basically, you're looking for a quality area of supply to short this as this market moves back up, which it's going to do, just like we would look at this ES contract and say your job is to look for areas to buy into this uptrend because that's the dominant trend and where it's headed. It's going to be to the upside. So let's join that trend at a price that's attractive, not like buying it right now. You wouldn't want to do that, right? You're at all-time highs. What buying right now is foolish. Could it go higher? Yes. But the probability is going to be better for us to buy this when it pulls back. All right. That will do it for our opening segment. We've got a bunch of great listener questions. I have a few more when we come back. Gayer wants to know about the EURUSD. I will check that one out, Gayer. If you guys have questions for us, feel free to send them on in at powertradingradio.com. I'm happy to look at any charts that you guys have. Again, these are just my opinions on these charts. I don't want you guys to take them as gospel and saying, oh, I got to trade that level. Don't. We need to understand, or you need to understand kind of why I chose those. And of course, that would go into core strategy and our supply and demand techniques we teach on the Trading Academy. You might have a different approach, which is absolutely fine. But this is really more from an education perspective, understanding that there are better places to buy or sell on any time frame and on every chart. Just want to make sure we're using the best possible ones so that we don't get stopped out and don't take big losses. Okay, let's take a quick break, TJ. When we come back, I want to make sure that we get to all of our listener questions. I got a couple more coming through, so if you have some, send them on in at powertradingradio.com. If you'd like to know more about that or our supply and demand methodology, which I mentioned, you can click that link, which is going to show up in our social media channels right now. That'll tell you more about the 50 centers around the world of Online Trading Academy, free classes, paid classes, community events, and much, much more. And hope we can change your financial future. We'll be right back.
Learning this way is fine when the stakes are low. But when the stakes are high, you need to rely on skill, not just knowledge. At Online Trading Academy, you build your skill one step at a time. We teach our students to trade and invest with a strategy, not a hunch. You learn our methodology, then practice it. You get to make mistakes and ask questions, and watch instructors make live trades. Develop your skill the right way. Click here to get started with Online Trading Academy.
Meet Mac. As a trader, he liked the signals that came from technical analysis tools, but they didn't help him find the best trades consistently, so he searched for a new approach. Mac attended Online Trading Academy's free class and discovered their core strategy, a trading methodology that spots when big banks are likely buying and selling, so everyday investors can too. Mac carved out a path to trade and invest with confidence, and so can you.
You've been listening to Power Trading Radio, live, fueled by Online Trading Academy. To learn more, visit us online at powertradingradio.com.
Welcome back to Power Trading Radio, everyone. Merlin Rothwood with you for your Monday edition, kicking things off with a solo show out there. Hopefully you guys enjoy that. And sometimes, I don't know whether you guys like when I'm here all by myself or not. I tend to get to a lot more questions, which is always fun. It's always great to talk about what viewers want to talk about. I noticed that in Scamble and Ruben, you guys got a great conversation going on about electronic payments. Yeah, that is really interesting, isn't it? And then on Scamble, I like your comment. It'd be very interesting to see how money is moving now, right? It used to be physical. Now we're seeing a lot more with credit cards, and all of a sudden these payment systems where you're just tapping with your phones, and pretty soon you just be able to point at something and it'd be embedded in your fingertip or something. I want it. Boom, just point like a gun and you're shooting prices. I don't know. It's just getting crazy. It'd be really cool to see how all that money is moving around. I think what it's done is really opened up the global economy. When we think of that on a macro level, though, it'd be very interesting to see what John O'Donnell's thoughts are on this, because it's not that we've had this closed ecosystem, but imagine our market here in the United States, obviously we're generally buying products here in the States. So when I go to the store, I'm buying American products. However, that actually is not 100% true. That money is going to, let's say, China, where they're manufacturing the TV, or to Japan, where they're manufacturing other components, or different parts of the world. So we might feel like we're just buying U.S. products, but in reality, we're actually spreading that money around the globe. And given the fact that America is one of the richest as far as per capita money, it's actually distributing that wealth more across the world. So it'll be interesting to see what that flow of wealth looks like, because you have this concentration in a couple of areas, and now as we continue to buy, how that is starting to slowly spread around the world. And I think you're certainly seeing a lot of that with China and India and third world countries, but or emerging markets, let me say that. So yeah, very interesting. Davide Brito, hello, nice to see you. I'm glad you're here live. Feel free to ask questions as we progress through today's show. You know, I know there's a big, these guys are always very active over there on social media, but feel free to chime in your question. I do scroll through and try to find the questions and answer those. One of those was from Gayer, who, welcome back, Gayer. He says, EURUSD, what do you think of the EURUSD daily? I think that I should almost take a step back and just say, okay, everybody, I want you to look at this chart right here and tell me what you think, right? And go ahead. I'll not give you my answer here for a little while, but if we look at that EURUSD, this is a daily chart going all the way back into late 2016. What do you think the action would be if we were to do pure probability? Remember, success as a trader is going to be based off of probability and how well you use probability. So if we look at just the nature of this beast and price action, it tells you that, hey, you know what? It's been drifting down for a while. So what do you think is the greater probability of us being a successful trade, going long or going short on the euro? Now, we could all pontificate and hypothesize about what we feel is going to happen with the euro. For example, and by the way, I'm waiting for you guys to type in the chat what you think. You should go long or short this euro. And I'm looking at it on this chart, so think a longer term play, not day trading. My feeling on the euro is they're in trouble. You've heard me say this before. If we get a Brexit in January, if the UK actually finally says, okay, we're done, here's our deal, they lost their number 3 player. Actually, number 2 player, from 2 or 3. They lost their second or third best player in this team, which makes up the European Union. To me, that's bad. I look at my football team, the San Francisco 49ers. If we lost our number 2 player, that's tough. We have to change the way we do things, because there's a lot of input coming from that player. In this case, that input's going to be revenue and money. So I think that overall that's going to hurt the euro, and I think we're seeing that reflected. That said, we know darn well this thing could change in an instant. Right? It could all of a sudden vault. Like, let's say all of a sudden they decide to have a new vote and the UK decides to stay in the European Union. I think you'd see this euro spike like crazy. But let's see, so Gayer says to short, and see if you guys on, Legend NJ says downtrend short, and Scamble says USD, hot. Okay, well that's good too, right? So on Scamble, you say USD hot, but how does that translate over to this chart? If I'm looking at the Euro USD and you think the dollar is hot, what should we be doing then? We should be staying short, because remember, there's pairs. And this is, if you buy the Euro USD, you're buying the euro and you're selling the US dollar. And if you say USD is hot, so what should you do? If you think that dollar is going to continue, then instead of buying the euro and selling the dollar, we have to flip that whole equation, and we sell the euro and we buy the dollar. That's what would happen if you sold the Euro USD. So in this case, I agree with everybody. It said, Nicholas says, I would short and hold until it reaches a strong demand. Yeah, and that's kind of a challenging part here, because look at that trend. I mean, this is beautiful. It doesn't get much more beautiful. And of course, we have to step back and look at the bigger picture, right? Because if I switch this over to, let's say, an hourly time frame, you guys look at this and go, well, okay, well, there's a lot of chop. I couldn't really pick a direction. This is where it's important, critical, in my opinion, this is just my opinion, to start at a bigger time frame. Look at that daily chart. If you told me that going long was your answer on the Euro USD, I'm not going to say you're wrong. I'm just saying that you would have issues from a probability perspective, right? I don't think I'd ever, well, I take that back. I was going to say I don't think I'd ever tell someone they're wrong. Not true. I definitely have done that before. But with the market, you never know. It's just about what are the odds, right? What is the most likely scenario in this one? I think you guys all got it. On Scamble, you're right. You would short this. So, Gayer, you said, what are my thoughts? Weak, short it, continue it to the downside, simply because the trend is your friend. The key becomes now, where exactly to short it, right? It's easy to make that statement that, yes, this is a downtrend, and yes, it's continuing to go down, but where we short becomes very critical, and of course that goes back to supply and demand. There are a couple of supply levels up above, which I would probably focus on, but we won't get into those details there. All right. Let's do this. Let's take we're going to go, do I add one more question I thought was coming in here? No. Nope. All right. There was a question that came in about the Fed balance sheets, which I thought was interesting. I needed to take some time to go look at charts, but the question dealt with, what do you think about the Fed doing all their backing right now of the markets? And look, we can make the argument that that's exactly why this market has been doing so well, and also the repo markets. What was interesting, and I have the chart, I just don't have it here with me. I'll bring it up over the next couple of days. We've had this period where the Fed balance sheet has been dropping and dropping and dropping. They have been telegraphing their punches and saying we're unloading our balance sheet, we're getting rid of stuff, which is great, right? I think that that's what they should be doing. But all of a sudden, with this repo market, they've piled on $278 billion from that repo market in the past 3 months. So all of a sudden we have, and I don't remember exactly what it was, but obviously it was $278 billion worth that they've unloaded over the past, let's say, 8 months, and in 3 months we've already bought that back. That's kind of frightening to show all of a sudden that big of a capital infusion into the markets. Look, it's great for stability. It's great for continuing this bull market. It just makes me nervous that we're in a market situation where we have to continue to have the Fed bail out this market when any issue comes up. Sometimes, or at some point, that may not always be the case. And of course, that adds the black swan event, which certainly I think there could be a black swan event down the road. Right now, things are looking great from a bull perspective, and you're seeing more and more people go bullish on this market, which of course, when I see that, when the main big talking heads are saying bullish, that's when I'm actually looking at the bearish side of things. All right, excuse me for the cough there. I was going to go to commercial break, but I thought, you know what? I don't want to do a commercial break right now. We're just going to keep on going. So that said, let me see if I got any questions on from Power Blast out here. Let's see. Brian Dennis says sell. Yep. Sorry, Brian, I got a little late. So yeah, sell that EURUSD. That's it. Okay. Long-term, short, long-term, long, short-term, short, long-term. All right. I get that. Okay, let's just go ahead and wrap this one up. I want to go to our economic calendar for today. Of course, if you are interested in anything we talked about today, I know I went on a lot of different topics. A lot of it has to do with rules, structure, fundamentals, and understanding exactly where these markets are poised to have a high probability turning point based off of characteristics that have happened in the past, and that list of characteristics we like to call our odds enhancers in conjunction with core strategy. If you'd like to learn more about that, we have free workshops which will tell you more. We have classes on options, futures, forex, commodities, real estate, much, much more. So if you'd like to know more information, you can go to tradingacademy.com. There's some information there. The simplest thing to do would be just to click that link that's showing up in your social media channels. That'll tell you which of our 50 physical brick and mortar schools are nearest you and help you learn. Okay, TJ, Monday. We're on Monday. Let's go back. At the end, these numbers were nothing extraordinary anyway. We'll go into Tuesday. There we go, November 19th. For the U.S. markets, we have building permits and housing starts. Today's numbers with regards to NAHB, again, that was no big deal. Otherwise, I would have talked about it earlier on. For the euro, you have current account and German producer price index. British pound has CBI industrial order expectations. Canada with manufacturing sales. New Zealand with the infamous GDT price index, which just continually just goes on and on and on. And finally, we have trade balance. All right, moving on to your earnings calendar. There are some interesting names this week, which I am very interested in. Tomorrow we have Home Depot. Of course, that is one of the home repair. It's a very, very important one. I almost sound like Donald Trump right there. It's huge. It's going to be really important. They're going to come out with earnings tomorrow. Medtronic, you have TJX companies. Transdigm. All right, Transdigm Group, apparently. Cop Art, Campbell Soup, and PagSeguro Digital reporting earnings tomorrow. Okay, I got those coming out as well. All right, our guest for the show for tomorrow is going to be Tim Pessett. Forex is the topic du jour. So I know, Gayer, you probably want to know about the Euro, South African Rand. I'm pretty sure Tim doesn't look at that one. But if you guys have a currency pair you would like us to analyze on tomorrow's show, or questions about how Forex markets work, currencies, etc., let me know what they are. Send them on in at powertradingradio.com. Click that button that says Power Blast. You can do that 24 hours a day, 7 days a week. get those questions to us so we can answer them live on air. I'm hoping I could see all of you tomorrow, plus many others that might listen to this podcast on iTunes. Have a good workout, by the way. Hope to see you at that webinar we'll be doing at 10 a.m. Pacific on the 19th. That's tomorrow. You can register at otacademy.com. It's free. All a lot about personality and psychology, the psychology of investing, and I'll even reveal some of my traits, let you know what my MBTI profile is. That will do it for today's show, everybody. Thank you guys so much for joining us. Click that link in social media to find out more. Until then, happy trading, everybody. We'll see you tomorrow.